Good morning from London. I'm Kriti Gupta alongside Valerie, Tytel. We're an hour away from the opening trade. Here's what you need to know. It's a big week for the markets. Investors getting delayed U.S. economic data and looking ahead to earnings from AI bellwether Nvidia. Is Bitcoin in the meantime delivering an early warning for what we can expect? In geopolitical news, China is escalating its confrontation with Japan over Prime Minister Sanae Takaichi's comments when it comes to Taiwan. State media now threatening major countermeasures on top of Beijing's travel warnings. And sticking with travel warnings, we are live at the Dubai Air Show as airlines and defense manufacturers announce their biggest purchases and investments. Valerie.
Well, we're kicking off this Monday with S&P futures adding to those late gains from Wall Street on Friday. We're up nearly 0.4% on S&P futures. Euro Stoxx 50 futures slightly in the red, just down 0.1%. It was a soggy session in Asia. Kriti, the MSCI Asia Pacific down near 0.2%. As you mentioned, those tensions between China and Japan seem to have bubbled over. The countdown to the opening trade starts right now.
Welcome to the opening trade. Happy Monday morning. There's a lot going on. When you read in this morning, there's a lot happening, but maybe not somewhere immediately to give the market some direction, which I think brings us nicely to the real main event this week, which really comes all around the technology story. That's the story that's been powering these earnings ahead. Do we start to see that maybe take a little bit more control maybe later in the week?
Well, look, it does seem like at least over the weekend there were still some skitters when it comes to angst around speculative assets. We saw Bitcoin wipe out its 2025 gains. Kriti, trade all the way down to 93,000. It's now down over 25% since its October 6th peak, gone from around 125K to now trading around 95K. Now, you can tie this to many things. We have obviously known that the equity market, especially those tech stocks, have really struggled as of late. The Nasdaq is down some 5% from all-time highs of late October. We've also had the background, though, of a hawkish Fed, and it's really hard for these speculative assets to really pull ahead on a Monday morning, given this overhang of hawkish Fed speak.
Yeah, it's a fascinating one because over the weekend we also got a little bit more details around Adriana Kugler's departure when it comes to the Federal Reserve as well. Last week we had heard Raphael Bostic is also stepping down. So there is a lot of churn there at the same time that we're talking about some of these financing pressures when it comes to the repo market.
Yeah, and this is something really interesting that we had news on Friday broken by the FT that the New York Fed had convened a meeting with Wall Street about short-term liquidity funding. Now, this is something really interesting because in the last month and a half, we've seen these repo rates rise above the Fed funds upper bound, showing some tightening of liquidity when it comes to short-term lending. And the Fed has been mostly on the sidelines. Now, this is a key departure from the Fed since the 2019 repo blow-up over year-end of 2018. They've always been very aggressive to step in when these repo rates have been climbing. That's not really the Fed that we've seen in the last few weeks. So perhaps this backdrop of these repo rates rising, the hawkish Fed decision, and this Fed cut in doubt in December is really giving the market a pause to think about whether tech stocks can really rally with this kind of backdrop.
I love that something so, frankly, nerdy and technical ultimately shows up in these broader assets. There's also been some analyst warnings that suggest that because it's year end, you are starting to see a lot of these banks, a lot of the primary dealers start to wind down their balance sheets, which could exacerbate some of the pressures that you are already seeing. So it's going to be something that's a theme that weighs throughout the entire week. Let's talk a little bit about the geopolitical space as well. There's plenty of trade headlines. There's plenty of geopolitical headlines. Venezuela's been in the news. India's been in the news. But I think maybe what's most relevant for this region is the developments over in Asia. China and Japan not getting along.
And this is interesting because it was just, a month ago, it was when Trump was meeting with Xi. Takaichi also met with Xi and was promising a better personal relationship. But it does come to see that these tensions are boiling over. We know Takaichi, the new Japanese prime minister, is a defense hawk. She's a hawk on China. She's previously defended or been very friendly to Taiwan. And perhaps this could have ramifications between the trade between the two nations. And they do have some pretty steep deep trade ties, not only when it comes to tourism. Over a fourth of tourists to Japan are Chinese, but also trade ties when it comes to exports. Japanese largest trading partner is China. So perhaps these tensions may be a reason why we had a bit of wobbliness in Asian markets overnight creeping into European futures.
Yeah, it's a fascinating one, specifically in the tech space as well, and I think that's really crucial. You're starting to see where does the signal come from. Is it the local geopolitics, or is it maybe the AI story you're seeing emanating out of the United States? I think it's really fascinating. You mentioned the relationship between Japan and China. We should talk about Donald Trump's role in all of this, because we've seen the U.S. and Japan actively not talk about Taiwan in terms of formal statements. So it's a real departure for Takaichi to make those kind of comments. It's also crucial that you are starting to see Japan be a key player when it comes to the shipbuilding, when it comes to the protections around the South China Sea. That's something the United States, and most recently in Donald Trump's kind of Asia tour, was a key focus. So you are starting to see some of the issues in the South China Sea, which have quite literally been brewing for, I would say, almost a decade, if not longer now, come to the forefront. It's just manifesting in a way that the markets are actually very aware of.
Yeah, and this could be something that could maybe disrupt the broader Chinese-U.S. Trade truce. We had Besson on Fox News saying that they want that framework agreement written on paper before Thanksgiving. Perhaps these skitters in the Southeast Ocean, as you mentioned, in the Taiwanese Strait, could be something that could disrupt that if Trump chooses to do so. But it is also a very busy week, especially when it comes to the tech story. The main focus is going to be on Wednesday after the bell. We do have those Nvidia earnings. But before we get to that, we do have Saudi Arabia headed to Washington. They are meeting with Trump in D.C. on Tuesday. Trump is hosting a meeting in the Oval Office, also hosting them for a formal dinner that evening. Wednesday, we have the UK CPI that is ahead of next week's budget. We also have the Fed minutes, and as I mentioned, those key Nvidia earnings. Thursday, we finally do get some of this delayed data from the Bureau of Labor Statistics. They will be releasing the delayed September non-farm payroll release. That was one that was scheduled and essentially day two of the government shutdown. Friday, we have the global flash PMIs for, again, a first look on how the November data is shaping up when it comes to the Purchasing Manager Index.
It's fascinating. There's a lot of different kind of tells that you get. You could get it from the Fed. You could get it from any oil conversation that's happening between MBS and Donald Trump tonight in Washington as well. You could get it from a variety of other places. Nvidia, of course, the high, but even the delayed NFP release. If it's a bad number, how much do markets actually look through it, or how much do they stake, I should say, do they put into it?
And I thought it was very interesting that we had all of this hawkish Fed speak last week, even talks from Evercore ISI's Krishna Guha saying that there is a real rift going on in the Fed. They're making these kind of splashes in the water even before this backlog of U.S. data has come out. So it's very interesting to know that the more regional bank presidents are really claiming there is no need for a December cut, even before we get this delayed September release, even before we get a timetable from the BLS and when they intend to release the backlog of the NFP, the PCE data, retail sales, something we'll have a close eye on. At least I will have a close eye on the BLS's website and when they intend to release those, if they do come before the Fed's meeting in December.
Yeah, it's a fascinating one. So it feels like Wednesday, Thursday is really where a lot of the data and the Nvidia story really comes in handy for this audience, which is handy because that's when Guy Johnson will be back around this set. For a global audience that's maybe wondering where he's at, he's at the Dubai Air Show. That's taking place this week as well. We're waiting for bated breath about what the kind of order announcements are, the investment purchases, some of the announcements from the defense players. As I said, our very own Guy Johnson on the ground for us. Guy, what are you hearing where you are?
Kriti, welcome to the Dubai Air Show. Welcome to the sunshine. It's amazing to be in the sunshine. Okay, let's talk about what we've got coming up. This is going to be a really busy show. This is one of the most important regions for the big civil companies like Boeing and Airbus. You think about the airlines that operate out of here, they are big global carriers and they order a ton of big wide-body aircraft, so it's super important. They're starting to buy a lot of narrow-body aircraft as well. But there's a bunch of critical factors that decide which aircraft they buy, which engine they use. And I have to say, Donald Trump has been one of the most important over the last year. He has made a huge impact in this region. A lot of big carriers, think about Qatar, have made massive orders for Boeing aircraft as a result of his involvement. How does Airbus push back against that? We're going to find out a little bit later when we speak to Christian Scherer. of Airbus. The other factor as well is what is happening with the engine story. We know that there's problems with engines up and down the scale class when it comes to aircraft, but the issue with Rolls-Royce and its ability to operate in this region is also critical. Are we going to see a big order coming through from Emirates? Which engine will they be buying? Which aircraft will they be buying? So those are the main factors, engines and Trump. That is what is going to be deciding how this air show really unfolds. The other factor as well is that this is a region that is keen to push on their technology. You were just mentioning Nvidia. Joby, we're going to be speaking to them very shortly, partnering with Nvidia, looking at AI. How's that going to impact the autonomous flight schedule of that business? But they're also probably going to be first to market here with commercial aircraft eVTOL flights. They're beating the US, potentially the FAA and certification in the United States, here in Dubai. When are we going to see those first flights coming through? So there's a lot going on at this air show, guys. It's going to be a busy few days.
Guy, you've already spoken to the head of Boeing Defense. Has he given a sunny outlook on the path forward for Boeing?
Steve Parker, yeah, he's now no longer interim. He's the permanent CEO of Boeing Defense, Security and Space. Yeah, he's painting a very positive picture. Val, the strike, the 15-week strike has just finished in St. Louis. That's critical. He's getting his workers back into the factories. That's going to be a big step forward. This is a business that feels like it's on the front foot once again. And it's really interesting. Look, the Saudis, you were just mentioning this. The Saudis are going to the White House this week. We're seeing big orders coming through again from this region for things like Patriots. Boeing make the seekers for the Patriot missile systems. They're seeing huge orders and they're having to ramp that up. They're also going to be making the new F-47. That's the 6th generation fighter coming through. How much interest is there going to be in this region for those kind of aircraft? Probably a bit of way away in terms of being able to deliver here, but everybody's interested in stepping up the defense space. I've been to many of these shows. Normally, they're all about kind of Emirates orders and civil orders. This air show feels different. This is the first air show I've been to where defense absolutely is front and center. Everybody's talking about how rapidly this market is ramping up. Back to you.
Bloomberg's Guy Johnson at the Dubai Air Show. He's going to come back shortly with a very exciting interview. He's got plenty more interviews, not only today, but tomorrow as well. Later this hour, Guy Johnson, as he mentioned, will be speaking with Joby Aviation CEO. That happening at about 7:30 a.m. London time. Plenty of other fantastic guests joining the show as well today. Let's go through some of them. Marianne Allier over at Carmignac will be joining the program, as well as Tom Becker from BlackRock, hot-footing it from San Francisco, join us around set here in London. And David Rees, the global economics head over at Schroders. Lots to digest with him, lots to talk about from around the world, Val.
Well, here's what else you need to know this morning. The UK government is set to announce an immigration overhaul, which could curb asylum seekers' access to housing and financial support. The wait for permanent settlement is likely to be extended to up to 20 years, with status reviews every 30 months. The tougher rules come with the Reform UK party continuing to hold a commanding lead over Labour as immigration pressures remain at the forefront of public priority. German Finance Minister Lars Klingbeil is headed to Asia, pushing for open, rules-based trade as tensions rise between the U.S., China, and Europe. He will take part in the German-Chinese financial dialogue in Beijing, meet officials in Shanghai and Singapore, and press for fair competition along with better market access for German firms. And finally, President Trump says House Republicans should vote for the Justice Department to release its files on Jeffrey Epstein, effectively reversing a position he'd held for months. Trump had been under increasing pressure from some within his Republican Party to release the investigative materials on the disgraced financier who ran an underage sex ring and died in prison in 2019. Trump posted on social media, "We have nothing to hide, and it's time to move on." Kriti, you have to start thinking whether this is early positioning for Trump when it comes to the midterm. He just wants this deal with Epstein that's been overhanging the Republican Party over and done with. Perhaps it's a high-stakes way to do it.
A really fascinating one, a complete 180 to your point, and also one to your point that's also something that is being used by the Democrats to kind of create more cracks within the GOP. As you talked about, this is crucial. We have another shutdown. We just came out of a shutdown. We have another one looming January 30th as well. There are other negotiations that need to be coming up. He has long held that he has had no association for decades. So we will, of course, see if this becomes a game changer when it comes to politics coming out of Washington, at least on the domestic front. Coming up on the program, though, we're headed to Johannesburg after the S&P has lifted South Africa's credit rating. We'll also preview the Bloomberg Africa Business Summit. Kicks off today. Full television coverage starting from tomorrow. And of course, we are not done with Guy Johnson. We'll keep an eye on Airbus shares as well, with the company set to make some gains when it comes to those orders at the Dubai Air Show. But up next, right back to the markets. We talked about Nvidia. We talked about the data. We're going to get some more expert analysis. If you have any questions of us, for us, of your own, for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Welcome back to the opening trade. European futures are pointing slightly lower, but it is a busy week over in the U.S. I want to talk about the U.S. earnings calendar because we do have two themes coming to the forefront. One of those big box retailers, we have Home Depot, Lowe's, and Walmart all reporting earnings this week. The second of big tech. We hear finally from the last of the Mag 7, Nvidia, to report results after the bell on Wednesday. And this comes alongside really tech stocks having not a great November so far. NASDAQ down some 5% from its all-time highs, and we're continuing to see the air come out of some of these more speculative assets. Bitcoin being the latest one. It is down now 25% from its October 6th peak, just trading around 95K. Yes, we're in the green this morning, but over the weekend, it all but erased its year-to-date gains. Some 600 billion in market cap has been erased since the fall from those all-time highs back in October. And some of this, Kriti, we can tag to what's going on in central bank policy. We've had a hawkish Fed decision just a few weeks ago. We've had hawkish members of the FOMC coming out and claiming that December cut is really not a done deal and they want to vote against it. We've also seen funding rates come under a bit of pressure. And to me, this is really key for where the equity market goes from here. We have seen repo rates climb steadily. There's been a few times now in the last few weeks, or in the last few months, should I say, that they have gone above the Fed's upper bound. And we've had a Fed on the sidelines, not necessarily aggressively doing anything about it. We did hear on Friday that the New York Fed did convene a meeting with Wall Street about these higher funding rates, but again, no action going alongside it. Kriti?
All right, Valerie Tytel walking us through some of the dynamics that we're expecting this week, ending very timely on the bond market. Let's get a little bit more analysis there. Marie-Anne Allier, fixed income fund manager over at Carmignac, joins us from our Paris bureau. Marie-Anne, a pleasure to have you on this program. Thank you for joining us on this Monday morning. I want to start with you where Valerie ended. She was talking there about some of the cracks that you're starting to see when it comes to this repo market, spikes that have not yet been addressed when it comes to the Federal Reserve. Just from your perspective, how are you thinking about some of those funding pressures?
We have looked at that very carefully. It reminds, 2019 when the repo market cracks. And the good news here is that we have the same kind of ingredient that in 19. So hopefully the Fed now knows how to tackle with this tension. They have already said that they end QT. Probably they will raise the balance sheet again in the 1st of December. So I think the Fed is now well aware. Again, we have the same kind of tension that we had in 19. So it's not new things. And I doubt that the Fed will be very surprised and will stay and look at this without doing anything. So I'm pretty confident the Fed will raise liquidity if needed.
Maria, do you think, though, that the fact that they've not already responded aggressively, something they've really done since that 2019 repo blowup, shows us that we're perhaps in a new regime when it comes to the Fed? Perhaps they're more hesitant to use their balance sheet after Treasury Secretary Scott Bessent has really made a case that he thinks the Fed has used their balance sheet too liberally in the past?
Yeah, probably. Maybe there is some sense of political, reasoning behind that. But at the end of the day, I really think that the Fed is really convinced that its role is to tackle with the financial market and the financial stability. And everybody knows that monetary repo always come with a money market, and the very short part of the fixed income market is where crisis and all the problems began. So I really think that they are looking at that very carefully. For now, we have some tension, but it was end of the month. It was, payment of coupons, and there have been a lot of settlement. There also have been a tax. So I think, they are looking at that. For the moment, it's nothing very, worrying in the sense that the financial market continue to run quite correctly. So I think they are looking at that. If tensions blow up without any reason, I think they will open the balance sheet, whatever Besant can say or don't say.
Marianne, let's talk about some of the other major pivot points that are happening this week. We are expected to get a delayed NFP print when it comes to Thursday. Does this matter for the markets, given that we have seen this disruption when it comes to some of the data? Come Thursday, do the bond markets even react?
I think the bond market is looking and needing some figures and official figures to know where the economy is heading, where the Fed will do, cut or not cut in December. I think it's very important for the market. Even if we know that this data can be revised strongly afterwards, I think the market needs to have some, and the Fed also needs to have some data to figure out where the economy is heading. We only have anecdotes at the moment, and it's very hard, to figure out with anecdote and with only anecdotes from companies where the economy is. So yes, I think the market could react. I absolutely don't know if they will be, bullish if the number is bad or the opposite, but I think the market will react. We need some data at the moment.
Marianne, how worried about inflation are you? We've had these two narratives over the weekend coming to a head, one of which being a study by the San Francisco Fed showing that in the last 150 years, tariffs are disinflationary. They impact aggregate demand to the downside. And then we also have had this discussion around these tariff stimulus checks, let's call them. Besant out talking to Fox News about how this $2,000 stimulus check would need congressional approval. That could be something that could ignite inflation worries further. Where do you stand on where inflation is going to settle next year?
We are in the camp where we believe that inflation break-even are too low for the moment, and the risks are in the upside and not on the downside. So on the inflation print, the fact that we will have a check and a tax refund at the beginning of Q1 in the US, it will boost probably the demand. Everybody is revised up, the growth for the US in Q1 and Q2. And at the same time, you still have, a supply lack of supply due to the immigration policy of the administration. And it means that at one point, when you have aggregate demand that is above the aggregate supply, you will have some inflation, and the risk is more in the inflation camp than on the opposite. I see the point on saying tariff is disinflationary, but it's maybe, in 1, 2, or 3 years, not maybe the story of the 6 months, the 6 first months of 2026.
Marianne Allier, fixed income fund manager over at Carmignac, joining us this morning from Paris. We thank you so much for your time, covering a little bit about what's going on in the bond market. Coming up on the program, we are heading right back to the Dubai Air Show. We're joined by Guy Johnson and a special guest. This is Bloomberg. 30 minutes away from the start of the opening trade. When you look at the futures picture, starting to see some divergence from around the world. Starting in the U.S., we are seeing some futures moving higher there, higher by 0.6%. That same enthusiasm is not showing up when you look at European futures. I should add, you also are seeing some movement to the upside on the Asian picture as well. Not super sure why Europe is lagging this morning.
Let's take a look at the European fixed income open up pretty solidly across the curves. Not a lot of movement when it comes to these 10-year yields. German 10-year yields are down by less than half a basis point. A lot of the catalysts for fixed income are going to come later in the week. That delayed September non-farm payroll print coming on Thursday, and then we do have those global flash PMIs on Friday. Perhaps a jolt to the fixed income markets.
Certainly, I think we're going to get a lot of action in the back half of this week, and the bond market is going to be a key piece of that. In the meantime, Guy Johnson will be back for that action. If you're wondering where he is, he's at the Dubai Air Show. He spoke earlier in programming to Boeing's Defense, Space and Security CEO Steve Parker on the sidelines of the Dubai Air Show as Boeing's factory workers in the St. Louis area voted to accept the company's latest 5-year contract offer, ending the longest strike at the plane maker since, get this, 1948. Take a listen.
It's just great to have the team back. They're the best in the business, building our fighter aircraft in St. Louis. So it's really, as they come back in today, going back through recertification work, making sure we've got all the quality standards right, and then we'll get them back on the job. But really pleased the strike's over with, the dispute, and just excited to get the workforce back in and get them doing what they do best, which is building some of our most advanced systems in the world.
Steve Parker, CEO of Boeing Defense, Space and Security there, of course, speaking to Guy Johnson earlier this morning. He's still at the Dubai Air Show, Steve and Guy, of course. Now, Guy joins us with one of the pioneers in electric aviation. Guy, over to you.
Kriti, thank you very much indeed. Yeah, welcome back to the Dubai Air Show. A lot of focus, I think, probably over the next couple of days on these kind of mega orders that are coming through. What is Emirates going to do? What kind of size orders are we going to see for Boeing and Airbus? But the UAE actually is interesting from a number of different angles when it comes to the aerospace space right now. And one of those is what is happening with the eVTOL space. So they're kind of pioneering the space right now, trying to maybe get first to market with products that are going to shorten distances around the Emirates, and do it quietly. Now, the eVTOL story is getting really exciting, and 2026 looks like it could be the year when we finally start to see some of these products actually becoming real for you and I, for the consumer. We're actually going to start using this stuff, and it's going to be really interesting to see kind of how the UAE environment works versus getting this product into the US and FAA certification. Joby Aviation is the CEO of Joby. He is actually the original Joby, I guess you could say, and he joins me now. Nice to see you.
Wonderful to see you too.
So look, 206 today, we're going to be seeing this thing flying around, your aircraft flying around here. And that feels like a massive milestone, that the public actually is getting kind of line of sight on this aircraft. How close are we to this becoming a reality, a day-to-day reality in cities like Dubai, London, New York?
This is happening right now. It's so exciting. We had our first flight, A to B flight here in the UAE this last week, and as you mentioned, we're flying our aircraft every day here at the Dubai Air Show, the only eVTOL to be flying, and we're very grateful to our collaboration with the local regulators, the local government, and so pleased to be launching our exclusive air taxi service here in Dubai this next year.
So next year it's going to happen. In terms of why here, like, is it a regulatory story? Can you get first to market here? Is that why we're seeing maybe everybody focusing on what is happening in the UAE in the Gulf?
The UAE is incredibly forward-leaning on new technologies, and we've been working closely with the government of Dubai since 2017 to lay the foundation for this, and to be right here on the threshold of launching this service is incredibly exciting.
So it's going well here in the UAE, and the regulatory process you're going through, you're clearing some major milestones. You've done this 17-minute flight. What's the next major milestone that we're going to see?
So we have the approval of the aircraft, we have the approval of the maintenance operations, the pilot training operations, and the flight operations. And so we're pursuing all of those tracks in parallel, as well as scaling our team here on the ground.
How does this compare with the experience with the FAA? What are you doing with the FAA? When are we going to see FAA approval? What does that look like?
So all of this is built on the foundation of our certification work that we're doing, we already have our 135 operating certificate in the US, we have our pilot training academy, so all of this all the work we're doing here in the UAE is built on the foundation that we've built with the FAA.
So Dubai first, or maybe Abu Dhabi first, and then New York second, third?
So we think that scaling here in the UAE is going incredibly well with the president's executive order that dramatically accelerated the operations in the U.S.
Talk me through the impact that had. What impact has President Trump had on this space?
So the president signed the executive order, and what's going to come out of that is at least 5 state and local regional governments that will be selected in the EIPP process for early eVTOL operations. And so that's going to be an incredibly exciting story to watch over the months to come.
Are there any bottlenecks right now you're seeing? Is it finding space to build kind of the landing and taking off slots? Kind of what is it that you now need to do to make this a reality, and just in terms of the logistics?
This is a huge wave of support that we're seeing from real estate developers. Real estate's always been about location, 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 and now here's an opportunity for a new class of transportation to make difficult to reach locations accessible, and we think that's a game changer.
What are the implications of that? You're living in New York, you're working in New York more importantly. Is this going to change where I can live?
Absolutely.
In what way? Is this going to be a commuter product? I've heard people today talk about a comparable price point with Uber Black. Is that a reasonable kind of assumption? That's
what we have today with our Blade helicopter service in New York, where it costs you the same amount to get from JFK to Manhattan as it costs in an Uber Black. You're doing what could take you 2 hours. It's stuck in traffic in 7 minutes in a helicopter. And this last week, we launched our commuter service from Westchester to Manhattan, and we've had incredible demand and incredible excitement for folks that want to be able to live in a beautiful location and be able to work in the city.
What about London? What about Paris? What about Berlin? Kind of walk me through the story in Europe.
We're incredibly excited about all of those markets. We've got phenomenal engagement with London, and we think that London is a spectacular use case. But we really are, again, it's key to scale the vertiport network.
Okay, you did a deal. You've partnered with Nvidia now, which is kind of, for a lot of investors, a big tick in the box. What does that bring to you? The ultimate destination here could be autonomous flight. How does the partnership with Nvidia change that?
Yeah, so we've been working closely with Nvidia for a number of years, being selected as the aviation launch partner for their next generation autonomy stack is absolutely incredible. Nvidia's invested huge number of engineering hours. I believe it's tens of thousands of engineering days, months. It's just massive amount into the certification framework for their autonomy stack, and we're really excited to take and lever on top of that for bringing autonomous flight into daily life.
What is the secret sauce here? Is it the fact that it's sustainable, it's electric, or is it that it's quiet? What are people going to notice here when you bring this product to market?
It's all of those things, and the acoustics, as you mentioned, are absolutely critical. This is something we've spent the last 15 years perfecting, and it's not just the absolute noise level, but it's also the quality of the sound. It's not the wop-wop of a helicopter, but more of a whoosh that blends into the background. When it's flying overhead, it's nearly silent.
And what does that mean in terms of, people talk about the sort of the low altitude economy. How far away are we from a low altitude economy?
It's launching this next year, and it's going to scale.
How big can it be?
It can be massive. My dream is that we transform daily trips on the ground into daily trips in the air.
Okay, and that's not just people. That's stuff as well. This is logistics. This is the military. This is all kinds of things that you're going to reach into.
The airspace is incredible in terms of its potential to unlock better quality of life across all those dimensions.
Joby, nice to see you. Thank you very much indeed for stopping by, joining us here on Bloomberg. Joby Aviation, the CEO, the original Joby, the CEO and founder of Joby. Guys, back to you in the studio.
Guy Johnson there in Dubai Air Show, bringing us a fascinating conversation. We thank you so much. He'll be back later in the show for more coverage with the heavyweights in the aerospace and defense industry. Coming up on the program, though, BNP Paribas urging a judge to throw out the $21 million verdict on a Sudanese human rights abuses cases. More details on how it affects that stock and others in your stocks to watch shortly. Stick with us. This is Bloomberg.
Welcome back to the opening trade. We're around 17 minutes away from the first cash equity trade here in Europe. And we have flipped into the green, but just slightly when it comes to Euro Stoxx 50 futures. And though, on what the U.S. futures are doing, we're now around session highs when it comes to the NASDAQ, up around 1%, near 0.9%. S&P 500 futures up around 0.6%. So this big rebound from Friday's slide is really taking the market's attention on this Monday morning. Kriti?
Yeah, taking their cue perhaps from what you're getting in pieces of the Asia session. In the meantime, investors are also getting new insights into the holdings of the world's biggest stock pickers with the latest 13F disclosures to the Securities and Exchange Commission over in Washington. Charlie Wells, one of our favorites, has been digging through the data and is here with the latest. Charlie, walk us through what we learned from some of these filings.
Well, Kriti, so much of this has to do with tech positioning by some of these large investors. So if you manage more than $100 million in the United States, you've got to file these 13Fs to the SEC 45 days after the end of the quarter. So we're looking at the third quarter here. And what we're seeing, about 25% of these filings of 13Fs weighted to tech. That is the largest weighting, followed by about 9% in financials and healthcare, consumer discretionary. And this has been a really interesting time, as any investor knows, to be invested in tech, trying to parse what this rally is going to look like going forward. If we take a look at the NASDAQ in that third quarter, we can see over the past couple months, yes, of course, there has been this trajectory upward. But if you look at the end of, say, July, the end of August, the end of September, you see some pullbacks, you see some questions, and we're seeing that reflected in these 13Fs as well.
When it comes to that, are there individual stock names, though? I feel like there's a couple that are going to stand out to our audience.
Oh, Kriti, I've got some winners and losers for you. And let's look at hedge funds in particular, because Bloomberg has dug through some 909 of these filings for 13Fs for hedge funds. And what we see here, when you look at market value, you see Nvidia coming out, having increased the most in the quarter, 11 billion, followed by Alphabet and by Apple. Let's flip the board and take a look at some of the losers here, because there's an interesting theme that's going to jump out at you. You take a look at these names, they're all tech as well. So you've got the winners in tech, you've got the losers in tech. Biggest loser here, down $6 billion in the quarter as far as market value. That's CoreWeave. They had a very bad, not good August. Their share price was down some 21% after a very disappointing earnings report here. I want to also take a look at how this is playing out through an individual portfolio. Let's look at Berkshire Hathaway. Warren Buffett in the news recently, of course, because he's stepping away from his annual letters. You take a look and you see the same pattern playing out in this individual portfolio. You see adding up to a nearly $5 billion Alphabet stake, but about a 15% trim in Apple. So again, trying to parse this AI-fueled rally.
Charlie Wells there giving us the latest on those 13F filings. He makes some of the legality actually interesting. We thank you so much, Charlie. But he's got me really thinking about the tech space broadly. You heard him talking about Nvidia, Salesforce, even how the Buffett take applies to the tech story, which brings me to a chart that caught my eye. As everyone knows, as watchers of this program would know, I love a good old correlation chart. And we've been talking about Bitcoin a lot this morning, and we ask a lot of our guests, is Bitcoin the tell for that ultra mega cap frothy tech? So I put it to the test. I'm looking here at the the NYSE FANG index. It's basically the index, the biggest mega caps, the Nvidias, the Apples, the Salesforces, all your really frothy kind of creme de la creme of the tech world are in this index. It is a more nuanced index, a smaller index than, say, the NASDAQ, for example. So really, really sensitive to some of the rate stories, really, really sensitive to some of the other speculative assets. That's that white line that you are seeing. The blue line is Bitcoin. I think this is really interesting because this bottom panel here shows the correlation between the two. And you can see it's generally positive. No surprise there. But you can also see that's been building up. We're now at a correlation north of about 60%. And I think this is really crucial here because as you see, this blue line, that's the Bitcoin story, really came down. Valerie Tytel was walking through that earlier. Is that a tell, putting my Guy Johnson hat on, is that a tell for what you're going to see when it comes to the Richie tech names? Is that an early warning that we're going to get post the Nvidia story on Wednesday? Let's get a little bit more analysis here and bring in our Markets Live executive editor, Mark Cudmore, on this very topic. Mark, you've been warning about this Bitcoin tech correlation, this Bitcoin tech kind of sentiment that's wrapped into each other. Your take on what this chart is showing?
Yeah, I think we will continue to see some of that negativity from the crypto space. I know it's trading stronger today, but I don't think the sell-off there is over. I think the digital asset treasury companies have turned into a negative for the space. So I think that the negativity in crypto will continue to lean on tech and will feed into this rotation theme. As we've talked a lot about in recent weeks, I do think crypto is at the leading edge of as a sentiment tell and kind of guides us where the retail space is. We know because of the K-shaped economy in the US that the US consumer is getting squeezed. They're seeing their wealth get hurt both by inflation and the rising unemployment problem, which means that you're seeing those favorite names of the retail space sell down. That sees crypto get hurt most sensitively, but you're also seeing some of the big and most favored names in the tech space as well, which is why you've got that correlation there. Now, we don't think as a group, we don't think that the AI bubble, which definitely exists, is bursting just yet. We think this is just a little bit of a stumble, but we do think that stumble probably continues in terms of rotation that we saw last week to continue over this week and the coming weeks in a choppy kind of regime because of Nvidia, because of the return of macro data. But we think there'll be a continued rotation away from some of those favored tech names into a slightly broader kind of stock market.
Mark, I'm always the one to think the Fed has a lot to blame when it comes to this recent move in the equity market. We've had a round of hawkish Fed speak, that obviously hawkish Fed decision a few weeks ago. How much do you tie the monetary policy story into what we're seeing in these tech stocks today?
So I think there's two aspects there. There's one is the Fed rate cut bets, and they've been pared back a bit. I think that's pretty marginal. You know, they've been paired from we're expecting a December to rate cut to now it's a coin toss whether we get one in December. I don't know that's been the big driver. I do think, and something you've been watching closely, Valerie, is the funding has been another kind of negative. I think that has impacted as well, but I think it's been a bit more of a it's a genuine story but a marginal story. It feeds the narrative here. It's a little bit alarming that we had such funding concerns at the end of October rather than at the end of the quarter, at the end of the year. So I think the monetary policy story plays into that, and the problem is I think US yields at the long end continue to go higher here as we continue to ratchet up fiscal concerns, and that will continue to weigh on the stock story. But ultimately, AI can probably power through this again and will do at some point in the future.
Mark, we have a very enthusiastic viewer following your every word. He's asking very specifically, I'm assuming it's a he, asking about your take on gold. Walk us through the dynamics you've laid out with Bitcoin, with tech, with the Fed story, and its impact on the precious metal.
So I think gold continues to outperform Bitcoin. That's been a theme we've seen this year, and I think that's a theme we'll continue to see for the coming months. They're both anti-fiat plays to some extent. They're both worried about the world's fiscal concerns and the fact that the only way governments have out of this over the long haul is to inflate away their debt, is to monetize their debt. So I expect that to happen. But I think that's a very long-term structural story. Importantly, people who use gold as a diversifier, remember that when markets reach their max point of panic, we will see a massive liquidation event in gold as well. It'll probably outperform until then. It'll probably bounce back quickly, but gold will suffer really badly when we get the bubble bursting in AI.
All right, Bloomberg's Marcus Live executive editor Mark Cudmore, thanks for joining us. And remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLIV Go on your terminal. Now let's get your stocks to watch ahead of the European Cash Equity Open with Chloe Melling. Chloe?
Valerie, let's start with Airbus today, as it is set to win a very large order from Fly Dubai at the Dubai Air Show. So that is a big strategic win for Airbus, because that is an order that was long expected to land very safely with Boeing, and instead it will be apparently going to Airbus. We have seen Airbus start to outperform Boeing a little bit over the last few weeks, and that really large order could potentially see this continue this morning at the Open. Moving on to some M&A rumors, and WPP is reportedly drawing interest from Havas, which is a rival advertising agency, and also private equity. So this follows a series of setbacks for the company, which has cut its guidance just a few days ago, and we have seen that reflected in the shares, which are down 65% over the last year. If we broaden it out and think about the last few years as well, the gap in performance between WPP and Publicis, which is the closest rival, has been widening further and further. So we'll see how the market reacts to the prospect of this potential deal, and whether they think that this could be a good thing for WPP. And finally, let's think about BNP Paribas today, after the bank asked a judge to throw out a court ruling that linked it to funding human rights abuses in Sudan. That is something that led the shares plunging when we had news of that verdict a few weeks ago. But BNP has asked the judge to throw this out, and has said that the $21 million ruling far exceeded amounts that were seen for similar injuries. So we'll see how the market reacts to that this morning.
Okay, our equities reporter Chloe Melly there walking us through some of our stocks to watch. We thank you so much for bringing that to our audience. We are about 7 minutes, we'll call it 6.5 minutes away from the opening trade. In the meantime, we are seeing futures kind of diverge around the world. We had an interesting session, a mixed session over in Asia. We had some outperformance in the likes of the Kospi, for example, some underperformance in the Chinese and Japanese assets, a lot of that having to do with geopolitics. But you look stateside, very different story.
Yeah, it looks like nothing's wrong. NASDAQ futures are up 0.9%, and I was just looking at it, Kriti. Since Friday's low, NASDAQ futures are up near 3%. That is a very steep reversal ahead of a busy week. Not only do we have these Nvidia earnings after the bell on Wednesday, we have these big box retailers also giving us a guide on the U.S. consumer and the delayed non-farm payroll release on Thursday. So quite surprising to see U.S. equities, at least out of the gate, very strongly on this Monday morning.
I think it's fascinating that you're not seeing European futures rally in the same way. It feels like they're getting a little bit more of their tone, a little bit more of their sentiment from what you saw perhaps in the Asian markets and specifically in the Chinese market. Seems to be the tone setter there. There are a couple, though. I also wonder how much of this is kind of sitting on the sidelines in Europe, maybe a little bit of autopilot to the upside in the United States ahead of Nvidia, of course, on Wednesday and the delayed NFP report on Thursday.
Yeah, those Nvidia earnings, I think, are really going to set the tone for whether AI is in a bubble, whether that's really something we need to be worried about, or are we again going to get shocked by another beat from Nvidia and maybe a calm down on those valuation fears when it comes to big tech. Coming up, we'll have the European Open, and European futures are pointing flat this morning. This is Bloomberg.
A few minutes to go until the opening trade here in Europe. We are a few minutes out, and we aren't seeing that much action lead the futures picture. We'll get to that in a moment, but this is where we ended on Friday when it comes to the S&P 500. The European close, of course, marked by this yellow line. And you can see we started off kind of in the doldrums, and then we did rally. Some of those gains were ultimately paired, but we ended in the green when it comes to the S&P 500. So what does that mean for the futures picture? Already we're seeing U.S. futures kind of skyrocket this morning. We'll get into the dynamics of that. You did see a mixed Asia session, and to me, right off the bat, we are seeing virtually unchanged for Stock 50, the FTSE 100. But it's the CAC that I have my eye on, because if you're worried about a Chinese read-through, if you're worried about exports, if you're worried about a devaluation, if you are worried about simply the Chinese growth story, it's actually likely going to show up in the CAC 40 story. And maybe that's probably the sentiment that's showing up. Nevertheless, the CAC 40 futures are your underperformer of the morning, Val, down about 0.2%.
Yeah, we have some single stocks we are keeping an eye on at the European Open. One of them is WPP. This is the UK advertiser has said to come under some takeover interest. This is a Sunday Times article that I am quoting here. Also an eye on SocGen. They have announced a new share buyback program worth up to 1 billion euros. And then lastly, Prosus. This is the European tech investor expecting a surge in interim profit on the back of some Tencent value increases. And Kriti, I'm also going to be watching the tech sector more broadly. We really saw a strong rally into the Wall Street close when it came to NASDAQ futures, and whether that lifts, for instance, the big heavyweights here in Europe, ASML and ASM. Kriti?
Yeah, it's really, really fascinating that we're going to see some of these. I mean, does the tech story really even bleed into the narrative? There is that piece. There's a geopolitical narrative. Again, this is why I went back to the CAC 40. If you are worried about what's going on in China, that's going to show up immediately in the French and, frankly, in the German indices as well. We're going to dive into that dynamic later in the show. It is, of course, time for the opening trade across Europe. Let's get these markets open. When it comes to the FTSE 100, right off the bat, kind of virtually unchanged. The futures didn't give us much to work off of. I am wondering if we are going to see a little bit more liquidity. Remember, we do have the Nvidia earnings, as Val mentioned earlier this week. We do also have a couple of other narratives as well. Remember, MBS is meeting Donald Trump today in the White House. Is there an oil conversation to be had in tomorrow's trade? Are we going to be talking about the BPs, the Shells, the Totals of the world right off the bat? The Stock 600, again, giving me nothing here, but you can see that the underperformers from the futures picture, Val, are the early underperformers of the session. Yeah, let's take a look at how at least the sectors are performing, if my screen gets off frozen, on how we're shaping up here. It looks like a pretty even open. We have around half of the equities open in the red, around half of them in the green.
strain. And when it comes to sectors, we are seeing a bit of a decent bounce back when it comes to tech. As I mentioned, we do have the NASDAQ leading gains right now when it comes to Wall Street futures. We're also seeing one of the biggest stocks to the upside, up over 4%, WPP. So it does seem to be reacting to the news over the weekend that they have gotten some takeover interest. Kriti, an interesting session so far. I know we have a lot to contend with this week, especially all those interested in the Nvidia earnings on Wednesday.
Yeah, it's a really fascinating one. When you look at some of the individual movers here right off the bat, it is just kind of feels like a heavyweight kind of day, as maybe promised by some of the futures indication. You are seeing the underperformers very much in the French market. LVMH is taking a little bit of a battering. I feel like they tend to get their cue from what you see in the Asian session. They were also rallying on Friday as well. So the show shares down about 1% at the moment, and one of your biggest weights on the index as a whole. On your screen, though, you can see where some of the volume movers are. I'm not seeing a ton of volume today in general. It kind of feels like a sleepy Monday, if I can go ahead and say that. I will say, going on to the index contributors to the upside, though, a lot of these seem like companies that maybe guys interacting with. I'm seeing a lot of defense companies moving. I'm seeing the Airbuses of the world. Of course, we have one eye on Boeing as well over in the States in terms of the orders that are coming out of the Dubai Air Show. We know that has consistently been a major market mover, and certainly a sector we're going to keep an eye on for the rest of this week. We're going to give the markets a little bit of a chance to shake out here so we can get a little bit of a clearer rate. In the meantime, bring a little bit of a market expert, Tom Becker, hot-footing it over from San Francisco for us, Senior Macro Portfolio Manager over at BlackRock. Thank you for coming.
Thanks, Kriti. Good to see you.
Good to see you. We're trying to find a little bit of direction today. I feel like today might just be a write-off. I'm going to get in trouble for saying that, simply because it feels like the action is in the back half of the week. Walk us through how you're thinking about Nvidia. Walk us through how you're thinking about the delayed NFP report. Sure.
So I think some of the market volatility is coming back into the markets, given the end of the U.S. government shutdown. So the vol suppression of just not having data for a couple months, markets kind of continued on. A lot of the momentum names were continuing to do well. From here, we're a little bit less optimistic on directional equities compared to a couple months ago. The earnings outlook looks a little bit choppier, kind of the dispersion's a little bit higher across countries, but you don't have that uniform global thrust that I think we had in the late summer and early fall. So we pulled down a little bit of directional equity positioning. The leadership over the last couple months has shifted quite a bit to sort of junkier names, a little bit more leveraged names. And so the technicals that associate that don't look as good to us kind of heading into the end of the year. And so we've just pulled down directional equities. We spend a lot of risk in relative value exposure. So we still like the U.S., we still like Japan, we still like Italy. But there are a number of names that we think are a little bit overbought, some of the emerging market names that are a little higher beta. Let's come back to the, you said a bunch of things. So let's go back to the leverage story specifically, and then we'll get to kind of the global take. We've been talking about this kind of over leveraged, kind of bought conversation in tech for a very long time. Why now? Why the pullback now? So I think the market breadth has definitely narrowed. A lot of different sectors are focusing on AI. We had our investor conference amongst BlackRock a couple weeks ago, and you heard commodity experts, you heard communications sector experts, you heard European. Everybody sort of talking about how AI is going to impact their industry, their sector, their asset class. To us, that means that it's a bit of a kind of less diverse market. That is not as supportive as when you have lots of different cylinders kind of pulling up earnings. And then I think the dynamics since the Fed cuts came into kind of the market's focus in the fall, it's just a little bit more speculative, not so much AI, but just more kind of highly levered, more speculative names where the cash flows and the earnings aren't as near dated. And to us, that's not as supportive going forward. Well, Tom, what about the fact that this next stage of this AI boom is going to be fueled by debt? And we have a backdrop of a hawkish Fed, members of the FOMC claiming that a September cut isn't needed. You're also seeing tighter liquidity in the front end when it comes to repo levels. Yeah. How does that play into the equity picture for you? I think that liquidity is kind of an undercurrent that's going to be a little trickier for kind of all financial assets here. And as you mentioned, kind of some of those spread assets, those front-end refunding markets, those interest rates are a little bit higher than they were. The Fed is going to stop QT, and so that will help a little bit. But overall, we think kind of the liquidity picture doesn't look as supportive as it did in the summer. We think treasuries look attractive in the cross-section of government bond markets. And so we've actually been buying treasuries over the last couple months versus foreign markets, versus Europe, versus the UK. We think kind of treasuries with the end of that QT program and with a Fed that has a dual mandate, so they can respond a little bit more to labor market weakness compared to the European central banks that don't have that dual mandate.
Talk to us about how you're valuing gilts. We've had a blow up in the market on Friday on Reeves backtracking on this income tax increase. We have UK CPI this week. We have UK retail sales, and the budget is next Wednesday. How are you viewing the markets here?
I think Friday's price action pointed to the fact that the market is still has a lot of uncertainty. The CPI number is going to be really important. It's still not close to target. So, the BOE has, 3 cuts priced. But that's on the back of CPI kind of looking really solidly between 3 and 4%, services CPI above 4%. And so I think you're right to point out that CPI, the budget as kind of risk factors. But when we step back and we look at kind of the supply of gilts, it's still really challenging. You've got issuance at the long end that's still pretty high. You've got active QT sales, which you juxtapose that to the Fed, where they're ending their quantitative tightening completely, and the BOE is still kind of selling extra supply into the markets. And so it's a much more fragile debt market from our perspective. The currency is not super supportive. If you look at just euro sterling over the last year, you've had weakness from the sterling side, and that's going to just keep inflation a little higher. And so, whether the BOE can really validate what's priced in markets to us is a little bit more challenging. We liked it a few months ago, but here it just looks a lot trickier for gilts.
It kind of sounds like we're awaiting a sell-off come next week. What's your doomsday scenario come November 26th?
I don't think there's a doom. I think it's a bit of a tempest in a teapot. Well, no, the back end kind of sells off, and then the Bank of England has to respond by kind of keeping rates higher. And I think this idea that counter-cyclical monetary policy is a given, it's not a given. Not every country has that luxury. And so this idea that you can have a weak labor market and that's going to translate automatically into cuts, a lot of central banks don't have that situation. And so I think kind of the challenge would be one where the labor market continues to deteriorate, but inflation just stays sticky. And the question then for the long end of the gilt market is, who's going to buy the bonds?
Best case scenario then. How does Rachel Reeves get out of this with a gold medal?
I think, so first, the tax, you want kind of the revenue to come from non-inflationary forms of revenue raising. So you see this in Europe a lot, or the U.S. tariffs, they pass through to consumer prices. And so you raise revenue, but you kind of up the CPI. When you have these one-off adjustments that feed through into CPI, that's a bit challenging. I think long-term, when we think about debt sustainability over multiple years, you want growth. You need productivity. You need a plan for how does an economy grow to make its bondholders feel secure that there's a perpetuity of kind of economic resilience. And so I think the UK for a few years here has sort of had that challenge. The last decade has not been a great productivity growth decade.
Yeah.
And so how do you get out of that trap?
Tom, we have a month and a half to go before we close the books on 2025. Is there a risk event in your mind that the market is underpricing?
I think the U.S. data is going to be super interesting to see. So it's going to be stepping back in time. We're going to miss a month. We're not going to get all the data from during the government shutdown. But I do think now with kind of Q3 earnings out of the way, it really is going to be how does the U.S. consumer look? How is the labor market? Some of the more recent kind of big data that we look at look a little bit choppier. And so, we are questioning the resilience of the U.S. consumer a little bit more than we have been in the last few years. And I think that's just been powering a lot of global output. And so from our perspective, getting more of these kind of high quality data from the BEA, from the BLS is really kind of front and center in our view.
And that December cut is on a knife edge, at least when it comes to pricing in money markets. What's your view? Do they cut or do they hold?
I think from here, the path of least resistance is a cut. And so I think they wanted to put it more into play, and you're going to get more dissents here. But from where we sit, the labor market has definitely shifted to be much more the higher priority. And so barring kind of inflation really reaccelerating here, they seem to be comfortable with 3% inflation, like 3 is the new 2. Not to say that that is going to, play out as we head through 2026, but I think there's just a plurality on the committee that feel like the job market is just weak enough that they can kind of go again.
Even though they could get multiple dissents. Evercore ISI's Krishna Guha talking about how they could have maybe 4 at the December meeting. Really fractious a Fed at the moment under this huge political pressure from the Trump administration.
Yeah, which is probably why you're seeing such the kind of pricing that we are seeing in this market. Tom Becker, thank you so much for joining us, for coming in from California, senior macro portfolio manager over at BlackRock, joining us this Monday morning. Let's get a quick check on the core 6 here, the heavyweights that tend to move in the European session and move the benchmark as a whole. Again, a mixed picture, kind of what we saw in the sectors picture earlier as well. You are seeing the outperformer this morning is Rheinmetall and ASML. That tech theme is running strong. The defense theme is running strong as well. There's already a series of orders. Saab is one key example. Rheinmetall perhaps taking its cue from there as well. Schneider Electric, though, down about 0.3%, as is LVMH. The French underperformance continues throughout this market. Let's go check on some of the other individual stocks in the move. Chloe Melly is here with more. Chloe.
Good morning, Kriti. WPP is on the move today. It is up almost 4.5% after it was said to be drawing interest from Havas, which is a rival advertising agency, and also private equity. So this follows a series of setbacks for the company. They had seen guidance cuts, a share price that has seen a big downward spiral, and quite a lot of key client losses as well. But it seems that investors are getting quite happy about the prospect of a potential deal and think that this is actually maybe the right move for WPP to kind of move forward, and so we are up almost 5% this morning. Moving on to Société Générale, which has announced a €1 billion buyback. So this is a bank that had disappointed investors just a few weeks ago by not announcing fresh payouts when it announced its third quarter results, but it seems that now investors are getting what they want, and therefore we are up 0.7% for SocGen this morning. Moving on to the defense company Saab, which has announced a new deal to provide Colombia with new fighter jets, and that is a deal that is worth 3.1 billion euros. So this is a big order, and that is really getting the stock higher this morning. We've got a movement of 5.8% for Saab this morning on the back of this big order from Colombia. Going over to the provider of semiconductor equipment, SUSS Microtech, which is up quite impressively this morning. We're up 12% after setting out some new long-term targets, and that is targets that apparently investors are quite happy about. This comes just a few weeks after third quarter results that showed really strong order momentum for that company. So it seems that the outlook is quite bright for SUSS Microtech, and we are up 12% on the back of that. And finally, we are actually only have positive move this morning. Heidelberg, the provider of construction materials to the construction industry, is up 1.6% after being raised to an overweight rating at Barclays. This is a company that is a big beneficiary of the big fiscal stimulus and infrastructure investment in Germany, and we are up 1.6% on the back of that upgrade.
Chloe Melly from our equities team, thank you for running through the stocks to keep an eye on in this session. We do have the Euro Stock 600 in the green, up 0.2%. Those NASDAQ futures are up higher by 1% this morning. It does seem to be a Monday is a strong session for this U.S. equity market rebound. But coming up on the show, we'll check in on Deutsche Bank ahead of the firm's Investor Day as the CEO outlooks his next steps for the German bank. More on that next. This is Bloomberg. Welcome back to the opening trade. We're around 18 minutes into today's cash equity session here in Europe, and we're clicking on to gains when it comes to the Euro Stock 600, up just 0.1%. We are following some pretty decent gains when it comes to Wall Street futures. S&P 500 up 0.6%. NASDAQ futures up 1% to start this Monday morning. But let's check in on Airbus after Boeing has learned the aircraft manufacturer is set to win the majority of an order being negotiated with Fly Dubai. Sources have told us the European European aerospace and defense giant may secure about 150 commitments for its A320 aircraft. The deal would be an early strategic win for Airbus at the Dubai Air Show over its rival Boeing. Joining us now from Dubai is our own Guy Johnson. Guy, what is the latest news out of the event other than the sun is out quite strongly?
The sun is out quite strongly. It's nice to be in the sun for once. Feels like it's been a long time since I last saw the sun. Let's talk a little bit about the news that we've had. Look, that order that could come through from Fly Dubai, it's not confirmed yet. And it would be a huge win for Airbus, which actually dominates the narrow-body market in this region, but not with Fly Dubai. Fly Dubai is an all-Boeing fleet, so they can secure some big orders from Fly Dubai, and it looks like this order might be split between Boeing and Airbus. That would be a massive win for Airbus, and Airbus has been struggling in this region recently. Donald Trump has had a huge impact here in terms of the orders that we've seen coming through. His trips to the region, his impact on the region has been significant. We're also waiting to see whether or not there's going to be a big order coming through from Emirates. Now that could be for the A350-1000, the long-range version of that aircraft, but that's having engine trouble. Will Sir Tim Clark, who runs that business, order that aircraft, or, as we're hearing this morning, potentially place a big order for the 777X from Boeing? Remember, that aircraft's been heavily delayed into 2027, but Tim might have the confidence to place that order. Stephanie Pope, who leads the civil side of Boeing, is here in Dubai, pushing all of these programs very, very hard. So it's early stages. The SO is only just getting going, but it looks like there could be some very big orders from some of the big carriers in the region.
Guy, it feels like defense, and you mentioned this at the start of the show, is a bigger part when it comes to the narrative this year. You're already seeing some of the defense names move off some of the back of that. Walk us through what you're hearing on the ground.
So normally, Kriti, this is a civil show. It's dominated by the big civil orders coming out of airlines like Emirates. For the first time, I have to say, this is not the case this year. This feels like a show that is evenly split in terms of what people are talking about. Defense is now a much bigger piece of the pie. I was talking to Steve Parker, who runs the defense side over at Boeing, a little bit earlier on. Like a very different kind of vibe around his sector at this air show, and you can kind of understand why. A lot of people are looking to place very big orders, and it's interesting the Saudis are going to the White House this week. What impact are we going to see from that trip? You got the UAE looking to up its Patriot missile defense batteries. What impact is that going to have? So the defense side of this business, like it is in Europe, like it is in America, like in many parts of the world at the moment, feels like it's in a very different place. I've been coming to this show since the late 90s. I've never seen so many people or heard so many people talking about the defense side. Normally, it's just these massive orders from Emirates. But this show feels very different.
Well, Guy, when it comes to the more consumer-driven, we know that airline industry is kind of a decent bellwether for what it signals about demand. U.S. and European carriers have been signaling worries. But does that maybe pair with what we're hearing from the rest of the world at the show today?
So I was talking to Tony Douglas, who runs Riyadh Air, the new startup coming out of Saudi Arabia, about this a little bit earlier on. He says not yet. He's aware of it. He's paying attention to it. When he says when bellwethers like the big US carriers and the big European carriers, remember it's been Air France and IAG over the last few days, start to talk about a softening, you want to pay attention to that. But I was at an Airbus event last night as well. They're talking about epic demand coming out of this region. Huge, huge pickup in terms of the demand that we're going to see coming out of the Gulf. Yes, there are going to be some blips, but the long-term trajectory looks very strong. And you kind of think about the relationship with India as well, another massive market that is only a couple of hours flight away, that is also expanding very rapidly. People here are fairly confident in the demand outlook. But yes, they are paying attention to the wobble that we're seeing in America and in Europe.
All right, Bloomberg's Guy Johnson on the ground for us at the Dubai Air Show. We thank you so much. Of course, look forward to your coverage throughout the rest of the week. In the meantime, let's talk about another key event this week as well. This side in Europe, the chief executive of Deutsche Bank is set to unveil his strategy for the next 3 years this afternoon. Analysts expecting new financial targets, but few changes to the overall strategy. You're seeing Deutsche Bank shares higher by about 0.4%. Tom Metcalf, Bloomberg's managing editor for EMEA's finance coverage, joins us now. Thank you for coming. Walk us through what we need to be paying attention to.
Yeah, I mean, analysts, broadly speaking, not expecting any kind of drastic changes. I think what they're hoping for is maybe a boost to returns targets, and then, you know, on the strategy, maybe more some tinkering. So that the retail bank has always been a bit of a drag. Are there ways they can kind of boost the margins there and sort of make sure it's not quite the sort of black sheep of Deutsche Bank? But, you know, the last strategy change was much more significant. It was really sort of rolling back a few things on the investment bank, but seems to be succeeding. Certainly the shares are up. So the sense is executives today will largely be like, we're going to continue this, but with a bit more ambition.
Well, Deutsche Bank is having a new CFO take the helm in the next few months. Does he have a message he needs to send to the markets in order to maybe take out some of the skeptics on Deutsche Bank?
Yeah, I think on the personnel side, that would be the most interesting thing of today. You've got the current CFO, then CEO soon presenting, and then the new CFO, Raja Akram, coming in. So, yeah, no, I mean, I think he'll definitely be on display. He comes from Citi and Morgan Stanley. And, you know, the big question will be, you know, does he signal any kind of drastic shift in terms of how Deutsche Bank are doing? You'd expect on his first appearance, he's going to be very kind of calm and not try and spook any investors with any surprises.
Tom, let's zoom out for a moment, if we can, and just talk about the European banking sector broadly. We're going into the end of the year. We're maybe starting to see people wrap up their books. We're trying to see people, maybe a little bit of the deals that are coming down the pipeline or trying to squeeze through, maybe put on pause until 2026. Do buybacks get affected at all going into year end?
Well, investors will certainly hope not. And actually this morning you had SocGen coming out and announcing another buyback. They got the authorization from the ECB. And yeah, realistically, in terms of what is upholding these European bank share prices, it comes back to the capital return more than anything. So you'd expect not, because that would, you know, as long as they've been signaling their plan to continue them, you know, I think Q4 will be another decent period for buybacks, unless obviously something changes significantly on the macro front. Or
yeah, it's been like a massive run that we've seen in the banking sector, right?
Yeah, I mean, Deutsche Bank in the last 2 years, I believe the stock's basically tripled. It's on par to hitting book value soon. When it comes to what's going to keep this bank rally going in Europe, what is it in your mind?
Yeah, I mean, you need the economies to sustain. It's got to be that kind of broad-based, you know, with the rates moving around, they keep those businesses going. I mean, I think the sort of positive story about European banks is they spent so many years with negative rates on the continent, at least. You know, anything where the rates are positive, you think their businesses have adapted and become sufficiently efficient. But yeah, the biggest question always when it comes to European banks is, can they ever truly catch up with the big players on Wall Street? And so far there's a huge gap. And as you pointed out, look, Deutsche Bank shares massively run up, and yet its price to book is still just about 1.
Yeah, that's a fun number to have. Tom Metcalf, who leads Bloomberg's EMEA finance coverage, walking us through some of the strategy updates that we can expect out of Deutsche Bank later today. We thank you so much. In the meantime, let's do a quick check on some of the stocks that are moving the most in the session. We're 26 minutes into the European trade. Saab higher by 6.2%. This one's interesting. The defense orders, as Guy was mentioning earlier, at the Dubai Air Show, are coming in kind of hot and heavy here. Saab talking about a $3.1 billion order from an unlikely source, Colombia, of all places. But this is probably just the start of a series of orders that we're going to start to hear not only from Saab, but from other defense places as well. Airbus, Boeing, of course, still kind of in a tight race in terms of being able to secure some of those orders from Dubai. We'll see how much the defense and the Trump effect plays out throughout the rest of the week. Coming up on the program, we're going to go right back to the economics. David Rees over at Schroders will be joining the program. Stick with us. This is Bloomberg.
Welcome back to the opening trade. We're 30 minutes into today's cash equity session here in Europe, and it does look like we're going nowhere fast to start this Monday morning. Euro stocks 600, up just shy of 0.1%. Some underperformance in the CAC, but really, Kriti, it seems like we're just treading water, and this is despite a pretty strong showing for Wall Street futures. NASDAQ futures rebounding some 1% so far to start this Monday morning, but it doesn't feel like that exuberance is leading into Europe.
A little bit of a sleepy session. I think you can kind of see that treading along or chugging along or treading water, whatever analogy you want to use. And it's really emblematic of what you're seeing here. The volume on a 20-day average basis is down some 35%. However, sentiment, to your point, is skewed to the downside. You are seeing 304 members lower, 270 higher. And it is some of maybe the heavyweights that are pushing some of the markets, maybe just a little bit higher in some places. Nevertheless, let's talk about some of the leaders and the laggards. Some of the leaders, I think this is really interesting. I'm going to start over here. This is the Guy Johnson show, really. The Airbus and Saab story coming out of Dubai Air Show. You can see moving the markets quite substantially. We're going to continue to see that throughout the entire week. Siemens Energy is the other, higher by 3.3%. We saw a lot of action here last week. They came out with their earnings as well. So you are seeing some positivity in that stock. There are some laggards, though. Remember how I said there is going to be some weakness when it comes to the French markets. Well, LVMH is emblematic of that, down about 0.9%. There's a couple of other movers to the downside. Adyen, for example, taking a bit of a hit. But to me, Val, the heavyweight of LVMH really moving the French market lower.
Well, here's what else you need to know this morning. President Trump is ramping up pressure on Russia by backing proposed Senate legislation to sanction countries conducting business with Moscow. The bill would allow Trump to impose tariffs of up to 500% on imports from countries that buy Russian energy products and are not actively supporting Ukraine. This specifically targets major consumers of Russian energy, such as China and India. Well, sticking with China, China is escalating its confrontation with Japan over Prime Minister Sanae Takaichi's comments on Taiwan. A post from social media account linked to China's state broadcaster hinted at imposing sanctions and suspending economic, diplomatic, and military ties. Then the People Liberation Army Daily reinforced that message by saying if Japan became involved in the Taiwan Strait, quote, the entire country would risk becoming a battlefield. German Finance Minister Lars Klingbeil is headed to Asia, pushing for open, rules-based trade as tensions rise between the U.S., China, and Europe. He'll take part in the German-Chinese financial dialogue in Beijing, meet officials in Shanghai and Singapore, and press for fair competition, along with better market access for German firms. Kriti?
A really fascinating relationship between Germany and China, and really China and the rest of Europe. We'll still get a little bit more analysis in terms of how we should piece it all together. David Rees, head of global economics over at Schroders, joins us around the table. David, pleasure to have you on the program. Thank you so much for your time this morning. China, of course, in the news this morning for a variety of reasons. As Val mentioned, there's geopolitical tensions with Japan. There's a relationship with Lars Klingbeil, who, of course, is leading the German delegation there. There's a little bit of a market read-through that we're seeing into the French market as well this morning. How should we be thinking about China's kind of economic impact into Europe? Is there still an overcapacity story? Is it a kind of deflationary story? How should we be thinking about it?
I think it is. I mean, if you look at the Chinese economy, certainly the domestic indicators, they're quite soft at the moment. You've seen investment is tanking and consumer spending is really going nowhere. So you have still got this issue of demand not keeping up with supply domestically. There's better news on the trade front, so the US-China tariff story has been kicked into the long grass. But as you just pointed out, one tariff story gets dealt with, and then you get another one coming up around Russian energy. So you've still got that tension. Domestic demand isn't strong enough, and deflation is going to remain in place for quite a number of years, I think, in China. And they're going to have to ship that somewhere.
When it comes to overcapacity, I was really captivated by this chart in the FT about tomato paste exports, about how they used to export to Italy, and now that's completely reversed, and they're stuck with a huge stockpile of tomato paste. How are you viewing the Chinese overcapacity issues? Is this something that is going to cause deflation in the rest of the world? You know, their exports of EVs have surely dismantled some German industries. How do you think China's going to deal with it, and what are the long-term ramifications? So
I don't think the pressure is going to go away pretty clearly. I mean, the government has talked about policies such as anti-involution, but that really clashes and jars against the sort of 5-year plan where they continue to talk about manufacturing upgrade and leading the kind of global manufacturing and tech sector. So there's a clear tension there. And really, if anti-involution was going to cut down excess capacity, you'd be talking about mass job losses, which is clearly not in line with the kind of government's economic policy. So that pressure will remain there. I think the bigger question now in the future is which countries and markets are going to be willing to accept that excess capacity. So if you look at European industry. You pick out the car, which is the obvious one, right? So in Europe, if they continue to wave in cheap Chinese goods to the detriment of domestic manufacturing, that's going to mean local job losses, local deindustrialization at a time when populists are coming up and you've got elections on the horizon. So it's going to be very interesting dynamic between who's going to protect themselves and stave off populism and who's going to allow the goods and bring inflation down.
And you think Germany is one that's likely to not be able to cut those ties with China or to really be, I guess, waving the strong stick that the U.S. is on their trading relationship being balanced?
Historically, Europe has been more timid in terms of trade policies and tariffs, but you did see that first round of tariffs on EVs. There is a kind of precedent there that could be ramped up, but it's quite difficult for Europe to move in one big block, right, when you've got the different tensions across the region.
Talk to us a little bit about kind of if you could be prescriptive, if you could be kind of Dr. Europe for a moment and say, here's what Germany needs to wean off of that dependence. Or I would argue France, I would argue Italy as well, maybe even Spain that has those kind of big auto manufacturing sectors. What is the magic solution for that?
Oh, I think that's quite a difficult question because clearly there's been a major technological shift from combustion engine cars to EVs, and clearly you almost kind of got the first mover disadvantage of being so advanced in the combustion engines that you haven't really concentrated on the EVs, and then you've got someone's come up behind and overtaken you. So it's difficult. Probably there needs to be a lot of investment. There needs to be development in the auto industry to be competitive. But it is going to be really difficult. This is a global challenge that China is not going to be going away. It's supremely competitive, and its exchange rate is getting cheaper and cheaper and cheaper in real terms.
Let's talk about the UK. Speaking of magic wands that we need to be kind of waving around, we have a budget coming up in T-minus, let me do that math, what is that, 9 days?
9 days, yeah.
9 days.
Next Wednesday.
Next Wednesday, a very exciting time. We saw a wobble in the gilt market on Friday. What's your best case scenario? What's your worst case scenario come November 26th?
I think we've already had a taste of the worst case scenario where they're already backing away from income tax increases because the government is stuck between a rock and a hard place. Right? It is deeply unpopular, and it said it won't raise taxation, but it needs to steady the ship, otherwise the gilt market is going to find them out very quickly. So we're assuming that the government's going to rebuild a kind of tighten net by about 30 to 40 billion. Probably closer to the 30 now. They're not going to touch the income tax. It's a little bit of a concern that they're going to be concentrated on smaller measures which will be less effective in raising revenues rather than just raising income tax. So probably by the spring or at least the autumn next year, we're going to be back in the same position because it will be difficult to raise the taxation, and the UK is clearly still very vulnerable to an increase in global yields, which we think will probably be coming through and could quickly eliminate a lot of this headroom.
Dig into that for me. You do think that yields are going to rise next year substantially, and that could pose a threat to the UK? Is that mostly based on Treasury yields?
Partly Treasury yields, partly what's going on in Europe. So we did some analysis earlier in the year just working on the basis of Treasury yields, that if Treasury yields go up 100 basis points on a sustained basis, then you're going to add about 1% of GDP to the UK interest bill. So, and that would eliminate the headroom very quickly. So whether or not that's going to happen is a different story. But you could get the kind of the pressure coming from Europe, you could get it from the US, and now Japan is going to be loosening as well. So we just think global long-term rates will be rising, grinding higher over time.
Yes, the UK has to confront the rising tide of global yields as well as its own domestic problems. Exactly. It does really seem like a hard pickle for them to figure out. But next Wednesday is the UK budget, and famously the day before US Thanksgiving, which is not always kind when it comes to liquidity. So we'll have our eyes squarely on that announcement from the UK Chancellor. But thanks to David Rees for joining us this morning, the head of global economics at Schroders. Now back to China. Chinese state media is threatening further countermeasures in its growing confrontation with Japan. Beijing has taken issue with Japanese Prime Minister Sanae Takaichi's recent comments on Taiwan, in which she expressed concern that an attack by China might create an existential threat for Japan. Joining us now is Bloomberg's Tokyo Bureau Chief Isabel Reynolds. Isabel, China is now discouraging its people from visiting Japan, whether as tourists or students. What's been the fallout so far, at least in commercial terms and market terms, for Japan?
Right. Well, what we've seen so far today, obviously, is massive falls in share prices in certain sectors, and particularly vulnerable companies such as Shiseido. We saw a drop of 9% in Shiseido shares. and department stores like Isetan Mitsukoshi, that fell about 9%, I believe. And of course, also in the hotel chains and the airline chains, there have been all sorts of falls across the board. But I think if you look more closely, I mean, we've made calls around to try and find out what's actually happening in terms of perhaps cancellations of travel or, you know, bookings at hotels and so on. And we haven't found a huge effect so far. So we don't know so far whether this sort of encouragement to stay away from Japan is actually going to have a huge effect on the Chinese people's travel plans, or whether it's all going to sort of blow over relatively quickly. Of course, the Chinese do make up the largest single group of tourists to Japan. That number has been growing massively since the end of the pandemic, and that's the situation we're in now. Of course, Hong Kong has issued similar warnings to its people about coming to Japan. So those two together, if they were to sort of disappear overnight, that would have a huge effect on Japanese business.
Isabel, you explained it from a commercial perspective. Talk to us from a diplomatic and from a defense perspective. Earlier in the program, I want to say about an hour ago, we got some commentary coming from the chief of the U.S. Navy, and I just want to read some headlines out to you and to the benefit of our global audience, saying that he's not surprised by Takaichi's comments on Taiwan. They're closely watching how China uses aircraft carriers, and of course, they understand Takaichi's concerns over Taiwan. This comes right off the heels of a pretty massive Asia tour from the President of the United States. Just walk us through that dynamic there at a time when you are trying to see the defense story in the Indo-Pacific ramp up.
Right, yes. Well, I mean, I think I'm sort of not surprised that he's not surprised by these comments. Sanae Takaichi has long been known for her hard line on China. So for her to say something that is particularly threatening towards China is not that surprising. But of course, what she said, although it's more specific than what other leaders have said in the past, it's not really out of line with what Japan's policy has been. It's always been, you know, if there has been a situation that threatens our existence in close by waters, then we would engage in collective self-defense. In other words, that Japan would come to the aid of a country such as America that might be involved in that conflict. What the leaders have involved is sort of specifically saying that might happen in Taiwan. So that's the unusual part, but it's sort of saying the quiet part out loud. It's sort of what everybody knew, but hadn't said in the past.
Isabel Reynolds, our Bloomberg Tokyo bureau chief, joining us this morning to walk us through some of the details. We thank you so much for your time and, of course, for your explanation. Coming up on the program, we go to a very different part of the world. S&P upgrading South Africa's credit rating for the first time in 2 decades. More details on why coming up next. This is Bloomberg.
Welcome back to the opening trade. We're 46 minutes into today's cash equity session here in Europe, and European equities are going nowhere fast to start this Monday morning. Euro Stock 600 essentially trading flat this morning. We are tracking the gains on Wall Street futures, though. NASDAQ 100 futures up 1%, continuing their strong close in Wall Street on Friday. But now let's go to South Africa. S&P Global Ratings has lifted South Africa's credit rating for the first time since 2005, citing the nation's improving growth and fiscal trajectory. The company upgraded its assessment by 1 level to BB, 2 steps below investment grade. Bloomberg's chief Asia correspondent Jennifer Zabazaja joins us now from Johannesburg. Jennifer, what did we hear from the agency? It's been a great year so far for South African assets.
Yeah, Val, and I think many analysts are pointing to the fact that, I think, as you were just saying there in your intro, it's been 2 decades since S&P actually upgraded South Africa. So this is definitely a positive step. And if we take a look at just the details of what they cited in the upgrade, it seems like analysts are taking this as not just a positive step, but it seems like there is a positive tilt, because they are expecting even more improvements with this government of national unity, this coalition government that was formed just about 8 18 months ago. A lot of what S&P points to, though, is something that we've spoken about quite extensively over the past few years, which is hobbled growth in this economy, which is the state-owned power utility, Escom, actually improving and not being such a burden financially for the government. And so it seems like they're expecting more growth moving forward. And this is a welcome sign for this economy that has really struggled, at least from a growth perspective, from a revenue collection perspective. And so perhaps many analysts are pointing to the fact that if we do, in fact, since we did see S&P upgrading, perhaps we do see other credit ratings agencies follow suit, and then we continue to see investor sentiment potentially lifting for one of the biggest economies on the continent.
Bloomberg's chief Africa correspondent Jennifer Sabasaja walking us through this really pivotal moment for the country. We thank you so much. Ahead of this week's G20 meetings in Johannesburg, we are also hosting global business leaders at the Bloomberg Africa Business Summit. Among our guests tomorrow, JP Morgan's Daniel Pinto, the CEOs of the Johannesburg Stock Exchange and 91 as well. Before that, of course, Jen will be hosting an audio live Q&A on Bloomberg.com later today. Digital subscribers and terminal clients can put their questions directly to a panel of Bloomberg experts in real time. Visit Bloomberg.com/live Q&A for more details. Val, a really fascinating event that's going to shed some light on a part of the world that we don't cover that often.
Yeah, well, let's take a look at the risk events on the horizon. It is a busy week, both when it comes to politics, data, and earnings. On Tuesday, Saudi Arabia is meeting Trump in D.C. We'll be watching that for any cues on perhaps the glut of oil supply and where headed to when it comes to oil prices from here. On Wednesday, we have UK CPI. That is before the UK budget, frankly, that will be released a week after that. We also have the Fed minutes and a big one, the Nvidia earnings, the last of the Mag 7 to report. That is Wednesday after the bell. Thursday, we finally get some data from the BLS. The delayed September non-farm payroll release will be released at 1:30 p.m. on Thursday. Friday, we get the global flash PMIs for a first glimpse look on how the U.S. economy and global economies are shaping up in the month of November. Well, European stocks are starting the week on a flat foot along with U.S. futures as investors look ahead to the earnings, as I mentioned, from Nvidia and the long-delayed economic release of September non-farm payrolls. To help us walk us through this week's Bloomberg's senior equity strategist, Neil Campling, joins us now for more. Neil, I feel like the big center of attention is going to be Nvidia and what it tells us about these worries about AI valuations. What do we need to hear from Nvidia to calm these recent fears in the equity market?
Yeah, I think it's highly likely we're going to get a positive message out of the CEO Jensen, as we come to expect. But it's really the nuances that we get to hear. I think in particular, analyst questions will be around some of these agreements that have been reached, OpenAI, the funding that we've seen from some of these deals that have been announced in these kind of areas, and also the outlook in terms of where they see the market progressing from here. Particularly, I think, because we have recently seen TSMC's monthly sales, TSMC being obviously their partner for manufacturing these chips, were slightly lower than people had expected, a deceleration in the latest data. So I think that perhaps overshadowing everything else, given that at the center of the AI narrative, at the center of the big cap tech narrative, the center of all these big thematics that we have in global equities, Nvidia is absolutely key to really seeing the continuation of the rally, if you like, into year end.
Let's game this out. So Wednesday after after the U.S. bell, we get these Nvidia earnings. If they're a solid set, is this just buy more Nvidia come Thursday morning? And if it's a not so solid set, how badly do you get punished? Or even if it is a solid set, do you sell the news?
Sell the news, yeah.
Like how do we game this out?
Well, this is the thing, isn't it? And in fact, if we look back historically, sometimes the quarterly numbers from Nvidia have been particularly strong. You know, we're expecting something in the region of 56% year-on-year sales growth, which is, you're taking a step back, it's absolutely phenomenal. So sometimes the actual reaction to the stock is quite muted, we've seen in recent times. But if you take a step back and think that we're coming up to the anniversary, the 3-year anniversary in terms of ChatGPT coming up, and in that time frame, Nvidia is up nearly 1,000%. So the long-term narrative is the most important thing, rather than taking a short-term one-day view on the stock or related trades. As long as we get support for the narrative going forward on Wednesday evening, you'll get probably bullish reaction from analysts, etc. It's highly unlikely, I think, to get anything particularly negative coming out from the story on Wednesday evening.
Well, alongside Nvidia, we also get a bunch of retail earnings this week. A lot of the big box retailers in the U.S., Walmart being the big one on Thursday, but we'll also hear from the likes of Home Depot and Lowe's, which are tracked as well for a guide on consumer sentiment. This comes alongside all this chat about the K-shaped economy, that the tech exposed, the AI exposed, the wealthier bit of the U.S. is doing well, but the lower income households in the U.S. aren't. Do you think we'll see more evidence of that in these earnings releases this week?
I think it's going to be really key because, of course, it's not just the earnings, but the outlook into a critical time of the year, not just holiday season, but of course we've got Thanksgiving next week and Black Friday, etc. So I think the views in terms of what's happening in terms of data, we had, as you mentioned, the K-shape, and there's many people are saying that we're starting to see consumers wearing, if you like, the impact of tariffs. There are tariffs that have come through. That's impacting some of the consumers, and we might see evidence of that, I think, in the commentary coming out this week from those companies.
Let's talk about some of the data that we're going to get in the rest of the week as well. A delayed NFP report that everyone says doesn't matter. Does it matter?
Well, it's great we've got some data. Then that's great news that the BLS are giving us the data.
Low.
The bar is low, absolutely. And the problem is we've been relying on private data, and the ADP jobs data has become a real key watchword currently for the weekly data. And actually, last week was kind of seen as one of the reasons for the market sell-off. And the problem we have now is that even though we get the data this week, what happens then is it's September's data. We're getting ADP data on weekly that's happening at the moment. So even though we get September, what about October? You know, it's quite backward looking in terms of September probably doesn't reflect the impacts we could well have seen in data since then. So I think that the fact we've got data, great. The volatility around the fact that we're going to get a deluge of data and we don't know exactly when we get different pieces of data, that's an issue for markets and probably leads to a spike in volatility.
Well, Neil Campling, thanks for joining us around the table with a look ahead of what we can expect. This is Bloomberg's senior equities strategist. And Kriti, I honestly thought we'd get more from the BLS, from the Bureau of Labor Statistics, when it comes to what they intend to do with the October CPI release. That's the one that they weren't able to collect during the shutdown. And the market is really wondering whether they're going to skip it altogether, possibly somehow collaborate it with the prices they could scrape online and interpolate some of the other components. But I think that can be a huge factor for the markets and for the Fed, because it could have ramifications for the CPI print for months to come. Bloomberg's Anna Wong thinks it could have issues for the index up until May of next year. And you know, when there's talk about data quality, everyone seems to just use it to argue their own point to their own advantage, instead of getting a clear picture on the matter. But this debate around whether we are seeing this tariff pass through, whether it's done, whether it's still coming, is still rife alongside the market.
Well, the fact that you're starting to see, and we talked about this at the start of the show, the fact that you are starting to see so many of these Fed officials, Beth Hammack, even Raphael Bostic had made these comments previously as well, that things are not looking or the cap on inflation isn't as strong as maybe we had previously thought. But the markets are still pricing in several rate cuts, which begs the question, is that a data read-through? If you are flying blind, quite literally, and if you're worried then about some sort of data or lack of data clarity, is an insurance cut the better move? Or do you kind of hold and risk it until you have better guidance? And that, I've got to say, is a really tough predicament for any Fed official to be. And a conversation, of course, is going to feature in the lead up to that data print coming in on Thursday. Still had a conversation with Tal Cohen, the president of NASDAQ, joining the polls at 9:15 a.m. London time with our very own Tom McKenzie. That does it for the opening trade. The Pulse is up next. This is Bloomberg.